Good afternoon, members and market participants. I, Jwalan Gandhi, welcome all of you to another open house on Dated Brent Crude Oil Futures contract introduced by NSC. The contract is already available for trading with effect from 13th April 2026, which is just last week, the Monday which went by last week. It has been already few days that we have this particular contract. We thought why not to just have an open house with all of you, because this is a new and very unique contract that has been introduced by NSC in Indian commodity derivatives ecosystem. With me to explain today's topic, which is Dated Brent Crude Oil Futures Contract, I have Mr. Anup Rajwani with me, who is from products team. He'll be taking us through the products and the nuances that we need to understand for better grip on the contract that has been introduced by NSC. So let's start with basics for broader understanding, Anup. Derivatives on WTI crude oil is already available for trading since long time. If we can explain first what is Brent crude oil and also how India tracks the crude.
Thank you so much, John, for a kind introduction. As John mentioned that, I handle the uh, product side of commodity derivatives at NSE, and we are very excited for the launch of the Brent crude oil contract, which we launched on April 13th. I'll get into some basics first in terms of first, what is crude oil and what are the different varieties of crude oil which are available for the market participants in India and in the global markets. So again, very basic thing, crude oil is nothing but the raw material which is converted or refined into refined products such as petrol, diesel, furnace oil, which is used by retail participants, which is used by industries, manufacturing industries across the country for their energy consumption. So anything which you're using on a daily basis, something like you're driving your car or you're using uh, your plastic water bottles to drink water, every product which you're using is somewhere linked to crude oil. And crude oil basically acts, as I said, crude oil acts as the raw material for these refined products. Now, within crude oil, globally, there are three varieties which are considered to be the key varieties on which it is on how it is priced. For example, we'll talk about WTI crude first. This variety is basically associated with the North American markets. Specifically, it's a US variety. It's the prices of this particular variety is very is affected by the fundamental factors of US market, and it is considered as a landlocked variety. To give you an example, if there are any inventory changes in inventory changes of crude oil or the refined products in the US market, it will have a direct impact on the WTI crude. In India, we already have WTI crude oil derivatives, available for trading for the market participants. We have futures, options, which are doing, very well on the NSE platform. Moving on to the second variety, which is the main topic of the today's session, is the Brent crude oil. Now, Brent crude oil is the major variety when we talk about crude oil. So I spoke about WTI crude. WTI crude consists, caters to around 35% of the global markets. But when we talk about Brent crude oil specifically, it caters to 65% of the global crude oil being traded in the world. So it becomes a very important variety specifically for the European, Middle Eastern, and Asian markets, because any impact on, like, let's say, any impact on the geopolitical factors, any impact on the economies of particular countries within the Asian, Europe, and Middle Eastern region, it has a direct impact on the Brent crude oil. And Brent crude oil is specifically more important for the Indian market participants because India imports crude oil, as around 90% of India's crude oil requirement is imported, and it is all linked to the Brent crude oil markets.
Okay, that was a very good explanation to start with. Now, Anup, at macro level, there remains various participants and sectors for crude, like refiners, importer exporters, oil marketing companies, or there can be sectors who are heavily consuming crude, like aviation industry or transport and logistics, etc. So first, I guess it is important to understand that what are the key importance factors for such Indian participants when we are going to explain the brand variant as well.
Sure, Bhumi. So very important question. When we talk about the Indian crude oil ecosystem, there are multiple industries, multiple companies which are linked to it. First and foremost are the refiners. So you must have heard names like IOCL, BPCL, HPCL, Reliance. So basically, they play a very important part in India. What they do is they import crude oil, and at the same time they refine it into refined products such as petrol, diesel, furnace oil, and then they provide the same to the market participants. So market participants can either, as I mentioned earlier, it can be retail participants just like you and me, or it can be industries who consume these refined products. So these refiners, so when we talk about the Indian market specifically, India is a very big player when we talk about the refining capacity. So if you look at the refining capacity in India, it is much more higher than the global powerhouses, across the world. So India has a very high refining capacity. That is one of the reasons we import a lot of crude oil and refine it into different products. Now, these refiners, whenever they import crude oil, they import Brent crude oil specifically because that is the variety which is more suitable for the refiners. So if they input different kind of crude oil compared to Brent, the output of the refinery or the refinery margins will get affected. So Brent is something which the refining capacity of India, refining industry of India is more used to, more attuned to, and that is why the pricing of Brent crude oil specifically has a major impact on this particular industry. Now, some of these refiners also act as importers and exporters of petroleum products directly. So one is either they import the raw material, which is crude oil, and refine it into refined products. Second is they either import the refined products directly and they export the refined products directly. So, as I mentioned, that India is one of the biggest hubs when it comes to refining. A lot of refineries in India uh, refine the crude oil and export the petroleum products as well. So the pricing of Brent crude oil also becomes very important for them specifically because if there is a different, there's a deviation or there's a movement in the uh, raw material of the industry, it will have an impact on the final product also. So again, the emphasis is that everything which if you talk about refining products, if we talk about the raw material, or if we talk about the petrol, diesel, aviation fuel, everything is linked to Brent crude oil specifically. Talking about the aviation industry, you must have seen recently, you must have seen that due to the geopolitical disruptions happening globally, there was an impact seen on the aviation industry as well. Ticket prices were raised because the fuel cost was increased. That is primarily because the prices of Brent crude oil increased. So, if the price of Brent crude oil increase, that means the aviation turbine fuel, ATF, which is refined from Brent crude oil, that also sees an increase, and that again, that pricing of the fuel cost which is consumed by the aviation industry, that gets passed on to the main consumer, which is the flyers of those flyers in that
For the
particular.
end consumers.
Yes.
Okay.
So apart from these particular companies, we have transport and logistics sector. So anything which is being transported, as I mentioned, that the food that you consume also, that is being transported from the production center to the consumption center. So transportation also uses fuels such as diesel and petrol, and these industries are also specifically affected by the pricing of Brent crude oil and oil marketing companies. So as I mentioned that these refiners such as IOCL, BPCL, these are also known as OMCs. What they do is they refine the crude oil, make it into petrol and diesel, and pass it on to the retail participants through OMCs. So eventually, any impact on Brent crude oil also gets has an impact of the working of these OMCs, and the retail participants because it impacts the prices of petrol and diesel as well.
Correct. So now, when Anup, you were just explaining this, you mentioned about the Brent crude oil prices movement and all. So I guess in addition to this, we should also explain few factors which may affect Brent crude prices movement. So can we just try to briefly explain that?
You're absolutely right. So as I mentioned that the major difference between WTI crude oil and Brent crude oil is the factors which affect the prices of these two varieties. As I mentioned previously, that WTI is a landlocked commodity, majorly affected by the factors affecting the North American continent. But when we talk about Brent crude oil, uh, factors specifically in the Middle Eastern region, Asian region, European region affect the prices of Brent crude oil. So let's have a look on some of the factors which affect the prices of Brent crude oil. First, as I mentioned, geopolitical factors. So recently, if you have been following the geopolitical conflicts, you must have seen that the prices of Brent have been impacted more compared to WTI. That is primarily because the geopolitical factors, especially happening in the Middle Eastern markets, it impacts the prices of Brent crude oil prices specifically or significantly. Supply dynamics. So if you look at, so you must have heard the term of OPEC. So OPEC is nothing but oil and petroleum exporting countries. So the group of OPEC decides in terms of, depending on the prices and depending on the fundamental factors, they take a decision whether they want to increase the supply or decrease the supply of Brent crude oil. Correct. So any decisions taken by OPEC specifically has a very a very significant impact on the price of Brent crude oil. Uh, US shale outputs or US WTI output also plays an impact on Brent crude oil because it acts as a substitute for that particular variety. Sure. So in case if there are disruptions in the supply of Brent crude oil, some of the markets import crude oil from the US markets. So the inventory of US shale, the inventory of WTI crude oil also plays a major factor on Brent crude oil pricing. Demand trends. So before this particular period of geopolitical factors, you must have seen that the Brent crude oil prices were, on a very range-bound trend, or it was moving downward significantly. That is primarily because of Brent crude oil basically acts as a barometer for the economies of different countries. So if a particular economy or a country is doing good, you will see that the prices of Brent crude oil will have a you know we'll see an upward movement primarily because if there is a lot of economic activity happening in a particular country, that means the consumption of crude oil will also rise. Definitely. So one of the facts that I want to mention here is if you look at the Indian markets, India is amongst the top three consumers of Brent crude oil. So first is China, second is US, third is India. So any demand trends of US or China or India significantly impact the prices of Brent crude oil as well. Moving on to market speculation. So if you look at trading which is happening in the futures market also impacts the price of Brent crude oil in terms of if there's a lot of open interest building up, there's a lot of interest coming in from the non-oil market players. That also has an impact on short term of the Brent crude oil prices. Currency movement. So these Brent crude oil prices are primarily priced in USD. So any movement in, let's say, USD INR or USD compared to other countries' currency, that also plays an important part on the Brent crude oil prices. Benchmarking and pricing. So we'll talk about Platts and what Platts dated Brent is in the upcoming slides. So any impact on the demand and supply on the dated Brent the platform which is used by Platts also plays an important part. So I'll cover more information in terms of how dated Brent works and what is Platts in the upcoming.
Sure, no worries. Anup, before we just proceed, I request participants to keep posting their queries under the Q&A tab so they can just keep asking about the product that we have launched or anything surrounding that. During the session only, please keep asking and at the end of our explanation, we'll cover the relevant questions. But please restrict yourself to ask questions related to today's topic only. Otherwise, we won't be able to address that. Now, Anup, I'm sure that in international markets, Brent crude oil contracts are available. Before we move to specifics about contract that NSE has launched, can you brief on those international contracts available?
Absolutely. So, when we talk about Brent crude oil contract, this is single-handedly the biggest contract available globally. So you must have heard that there's a WTI contract in the CME market, in the NYMEX platform. That again is very liquid contract, but when we talk about Brent crude oil futures, it is the numbers of or the trades are much more higher in those particular contracts. So ICE, which is located in UK, uh, that ICE exchange hosts the biggest Brent crude oil contract available globally. So it is a global benchmark for the Brent crude oil variety across global markets. So any big industry or any big refiner, big oil importer and exporter usually either participates or tracks the ICE Brent crude oil futures. It's such a big contract. It is a contract where it is a cash settlement contract, but there's an option of physical delivery as well. If some of the market participants wish to take physical delivery, they can, through the process which is guided by ICE, you can even take physical delivery of crude oil over there. There are options also available on the ICE Brent crude oil futures contract. As I mentioned, that if you talk about the major participants in this contract, so the biggest physical market participants across the world, refiners, global hedgers, they participate in the ICE Brent crude oil futures contract. And you can see that the volume is very significant. It is a number of contracts. It's a very high number when we talk about the ICE Brent crude oil futures contract. The same contract is also available on the NYMEX platform. The NYMEX platform also takes its prices from ICE Brent and settles the contract on the ICE Brent futures. Uh, Again, this contract is also very huge. So this is primarily for market participants who are located in US and they prefer to trade um, in the same country on the exchange within the same country. They trade in that particular contract. It's a cash settle contract, no physical delivery there. Again, the primary users of this particular contracts are physical market institutions as well as the financial institutions, and this also uh, trades heavily when we talk about the specific numbers. If you can see that a significant number of contracts are traded in this particular contract as well.
Okay. Anup, till now we were just explaining about Brent crude oil, right? Specifics or basics of Brent crude oil. Now, the contract that NSE has launched is Dated Brent Crude Oil Platts futures contract. So, can we further explain what Dated Brent means?
Absolutely. So this is a bit of a background about what is dated Brent. So dated Brent, is nothing but the spot price of Brent crude oil today. So if you look at ICE Brent futures, it will reflect the futures prices of Brent crude oil. Dated Brent is nothing but the spot price of Brent crude oil today. In very simple terms, it's just the spot price of Brent crude oil today. Now, the dated Brent is basically an assessment which is given by S&P Global Energy, which is also known as Platts. So Platts dated Brent is the world's leading benchmark. Uh, so when we talk about the futures market, there is also a OTC market, a market where the crude oil transactions happen between the buyers and the sellers.
Correct.
Now, if you compare the OTC market compared to the ICE futures contract, the OTC market is much bigger,
Okay.
and they all refer to the Platts dated Brent. So, to give you an example, for let's say there is a refiner which is based in India. They are importing crude oil from Middle East, from a producer who is located in Middle East.
Correct.
Now, the pricing between these both parties happen in such a way that whatever crude oil that they receive in a particular month, let's say in the month of April, uh, the invoicing is done on the average price of the entire month of Platts stated Brent. So what will they'll do is they from first to 30th April, whatever the prices of dated Brent are, they'll take an average of that, and the invoice is raised on that particular amount.
Okay.
So this brings out the significance of Platts dated Brent. How it is considered as the primary assessment for the entire Brent crude oil value chain across the globe.
So can we just say that it is a very important benchmark, probably?
Absolutely, it is. It is the biggest benchmark available for the market participants.
Okay. And if you can just, so on screen, you have just mentioned about the prompt delivery and in the brackets, 10 days to 1 month ahead of assessment date. So in case somebody is interested to know about that, can you just explain a little?
Absolutely. So as I mentioned that dated Brent is nothing but the spot price of Brent crude oil. When we talk about spot price, is nothing but deliveries which will happen between 10 days to 1 month ahead. So let's say if I'm entering into a particular contract with anyone, so today's price, dated Brent price is, let's say, XYZ. What will happen is that the delivery will happen between the 10th and the 30th day.
Okay.
So that is why it is referred as a spot price, and that is why they term it as dated Brent, highlighting that the prices which will be there for 10 to 30th day.
Correct.
So the prices is of today, but the delivery period is 10 to 30th.
Understood. Understood. Now, as we were just mentioning, it being a very important benchmark, right? So, probably we can brief more on the benchmark prices which is available for this contract.
Absolutely. So, when we talk about dated Brent contracts specifically, uh, we have entered into a collaboration with S&P Global Energy, where we'll be using their prices or using their assessment for settling our contracts. So we will, talk about the contracting details in terms of how will we settle the contract. But these assessments are basically used, or these benchmarks are used across the globe by different exchanges. So if you look at ICE, or if you look at CME, they also have a dated Brent contract. If you look at SGX, and if you look at Tocom, they also have crude oil contracts which are settled on the Platts benchmarks.
Okay.
So Platts is an organization which like close to 1,300 contracts, derivative contracts across the world are settled on Platts benchmarks. And in India, we will be the first exchange to launch derivatives on S&P Global Platts assessment. So it's a matter of pride for NSE to become one of the exchange, one of the first exchange to launch derivatives and collaborate with S&P Global.
Great. Okay. Now, definitely, we were just mentioning that this is a very new and unique contract, which definitely we hope that is going to be widely accepted among market participants. But how is the market fit for this contract? I mean, if we can just brief on that as well, how it is aligning.
Absolutely. So whenever we design a product, the intent is to design a product which suits every market participants. So we want to design a product which suits the physical market industry as well as the financial participants who will be trading on the contract. So the idea is always, to find that particular benchmark which suits both the market participants. As I mentioned, that this dated Brent crude oil, that is a benchmark which is used by the physical market as a biggest, it's one of the biggest pricing standard for them. At the same time, this also caters to, but it's an operational fit for the financial players also, because there's a lot of volatility right now in this particular assessment, primarily because of the geopolitical factors. So, it helps the financial players also because they keep on tracking the news about Brent crude oil, but they do not have an avenue to, trade on that particular assessment. Correct. Now, with this particular contract, this option is also open for the financial participants who, want to utilize their knowledge or utilize the news available to them for Brent crude oil and participate in the contract to meet their investment objectives. The settlement mechanism that we have developed, it's much more favorable for the physical market participants, because of if you look at the Indian markets right now, historically the physical market participants, or the refiners, the aviation industry, the big manufacturers, even there they are affected by Brent crude oil, but they have never participated in a crude oil contract because this kind of product was not available to them. That is one. Second is the type of settlement that we have, introduced. It's very unique when we talk about crude oil market. So this kind of settlement is used in the exchanges across the globe, where we see a lot of participation from the physical market participants. So just to draw a parallel with international markets, the volume which is happening in crude oil contracts in the international markets, it's primarily driven by both by financial players as well as physical markets. So if you look at the biggest Middle Eastern producers, biggest European producers, they participate in the Brent crude oil derivatives in the international markets. But in India, that was specifically missing because first of all, there was not a specific product which was available, which was operational fit for these market participants, and they did not have this kind of settlement mechanism. So with this contract, we have introduced a new settlement mechanism. It acts as a proper fit or a customized contract for these market participants because first it is linked to dated Brent, which is the major benchmark for them. It is an INR denominated contract. So any currency risk that they have, when they are dealing in the international markets, that also gets taken care of, when they are trading in INR denominated contracts. And as I mentioned, that this particular contract is compatible with the shipment cycle and hedging practices which is followed, which are followed by these financial players. Correct. So to summarize, basically, this contract is a perfect combination which caters to the physical market as well as the financial players.
True. Now, definitely, many of the market participants must be tracking the correlation with different kind of contracts also. So now this contract, can we just try to show participants how it correlates with international contracts?
Absolutely. So, as I mentioned, that this contract is also uh, s- keenly sought by the financial participants also. Uh, they keep on tracking the international markets in terms of ICE Brent futures. They want to participate in the contract, but there are challenges because this kind of contract was not available in the Indian market. True. Now with the introduction of this kind of with the NSE dated Brent contract, if you draw a parallel or if you draw a correlation chart between the ICE Brent futures and the NSE Brent contract, you will see that it is a near perfect correlation. So we have close to 99.6% correlation with the ICE Brent futures.
So just to pinpoint for participants, it is the top left chart with blue and orange lines we are talking about, participants. So there you can see it is near correlated as mentioned by Anu. Yes, please go ahead, Anu.
Yeah, so the as well I mentioned that you can see the graph and you can see that how closely the prices of ICE Brent and NSE contract will move. So if any participants who are interested in participating in the contract, they can draw parallels from the ICE Brent futures, track the movement there, track the kind of fundamental factors which are affecting the ICE Brent futures and replicate the same on the Indian markets by taking positions in the NSE Brent crude oil contracts. So as I mentioned, it opens up plethora of opportunities for financial participants, who want to invest into ICE Brent futures or who have knowledge about the Brent markets. Now there is a contract where you can participate and use that knowledge to meet your investment objectives.
Correct. Any further correlation that you want to just highlight about?
So if you talk about correlation, between ICE Brent and NYMEX WTI, so the Indian market participants or the financial participants are quite attuned to participating in the WTI contract, which is already available on the exchange platform. You can also draw parallels between the WTI crude oil and ICE Brent contract. You will see that there is a 99% correlation. So as if you can see the chart on the top left hand side, you will see that we have drawn a correlation between the ICE Brent and the WTI crude oil prices. Uh, Now these are also correlated, as I mentioned, that there's a near perfect correlation of 99% between ICE Brent and WTI, NYMEX WTI futures. So if you want to participate in the WTI futures contract on the NSE platform and the Brent contract, you can do that. You can draw arbitrage strategies. You can uh, track the correlation between these two contracts and take positions on the on the NSE Brent crude oil contract as well. So the idea is basically there are a lot of mechanisms available to the market participants, a lot of benchmark available to the market participants, which they can look at and take positions or participate in the NSE Brent crude oil contract.
True. Now, apart from correlation, how is the spread faring between Brent and WTI variants of crude oil contract?
So, this Brent WTI spread is nothing but the difference between the Brent crude oil and WTI crude oil. Now, this particular spread, there are contracts available in the global markets on the ICE Brent and WTI crude oil spread. So, these contracts are heavily sought after. If you look at the volumes, also this contract is available on the NYMEX platform. In 2025, there more than 6 lakh, 6.5 lakh contracts were traded in this particular futures contract, which is the difference or the spread between the WTI and Brent. Now, if market participants want to, build a strategy around it, they can replicate the same spread in the Indian markets also. They can look at the international markets, see the spread between Brent and WTI, convert it into INR, and see what is the difference going on between the NSE WTI futures and NSE Brent crude oil contract also. So the idea is basically, apart from the direct correlation with these contracts, the spread between these two particular varieties can also be tracked in the international markets, and a view can be made in terms of what the difference between the NSE WTI and NSE Brent crude oil contracts will be.
No, I'm sure definitely this may serve to be very useful because now, as you were rightly mentioning, NSC is having both the contracts, WTI crude oil contract as well as Brent crude oil contract, which is a dated Brent. Now, people would be able to have probably possibility to participate across two benchmarks on a single exchange platform, right? Great. Now, any indication on important data pointers which market participants can track?
Absolutely. So we have compiled, a very short list of data points which are available to the market participants. Either it is available, through free public sources, or through some of the paid sources. There's a lot of information available when you want to trade in the Brent crude oil futures contract. So first and foremost, the US petroleum data. This is the data which the market participants currently also track for the WTI contract. Uh, that same data can also be tracked for Brent crude oil contract. Uh, the indicators which are used for the WTI contract, they also play the same role for Brent crude oil contract. For example, if you see that there's a large crude draw or large inventory, that can be termed, that can be seen as bullish for Brent contract. And if there is a large buildup happening of inventory, that is true for every commodity. So if you look, if there's a lot of supply coming in, there's a lot of inventory building up, that means that there's a lot of supply, and it may be considered bearish contract. OPEC plus supply. So this is one of the biggest drivers of Brent crude oil contract. As as I mentioned earlier, that OPEC is nothing but the oil and petroleum exporting countries consortium. Any decision which is taken by OPEC plus in terms of the production quotas, the supply quotas, they have a profound impact on the Brent crude oil prices. So just an example, if there are supply cuts, obviously we may see a bullish trend on the dated Brent. If there's an overproduction, there's an oversupply, it may be bearish for the Brent crude oil. So these are just examples in terms of how you can take these data points, interpret them, and participate on the NSE Brent and WTI contract.
Correct.
So, apart from that, we have weekly inventory data outside the US. You can track the ICE Brent futures, as I mentioned. There's also a concept of dated front line, which is nothing but the difference between the spot and the futures. That benchmark is also available on the ICE and CME platform. You can track that and take positions on the NSE Brent contract.
Okay.
So apart from there are some information which are available through media sources, or through paid sources, which is the rig count. Rig count basically nothing but determines the supply of Brent crude oil. So if you see that there is the rigs which are the rig count is rising, it means that there will be a supply increase. It may be termed as bearish. If you see that the rig count is falling, that means that the supply of Brent crude oil is restricted and which may have a bullish impact on the prices. Apart from that, CFT positioning data, European refinery runs and margins. Refinery margins are nothing but the basically whenever the crude oil is converted into a refined product, the margin which is determined of a particular refinery. So if you see that there's a drop in margins or there is higher means there's a stronger demand for Brent crude contracts. And if you see that the margins are lower, that means that the refineries are undergoing, maintenance, or there might be the demand of the refined product might be low. That means that the demand for Brent crude oil contract will be, lower. So that means it may be bearish for the particular contract.
Correct. Now, after this thorough explanation, I guess we can explain the contract specification for the contract that NSE has launched because definitely would love to know that.
Absolutely. So, when we talk about the Brent crude oil contract that we have launched on our platform, uh, we'll specifically go through the parameter, each and every, one any parameter.
Sure.
So, as we mentioned, that our contract is basically a contract on the dated Brent assessment, which are made by Platts. So, the underlying for us is the Platts dated Brent assessment. It is a plain vanilla futures contract, which will be listed on the instrument type of FUTENR, which is future energy. The symbol is BR crude oil. It's very easy for any market participants to remember because it starts with BR. We will have monthly contracts listed. So we have monthly contracts listed, and we at any point of time we'll have 12 contracts which will be available for trading for the market participants. The contract starts on the first day of the month, and the contract gets expired on the last day of the month. For example, let's say the last day of the month would be 30th April. So 30th. So initially we launched the contract on 30th April. So we have started with the May contract. So May contract is expiring on May 29th. So the next trading day which is available, the new contract will be issued. So at any point of time, we will have 12 contracts available for trading for the market participants.
Sure.
This will be traded as as any other commodity which is available on the commodity derivative segment. It will be available from 9 a.m. to 11:30 or 11:55, depending on the daylight saving. The contract is 100-barrel contract. So if you look at the current prices, it's around somewhere around 9,000. So one value or one uh, lot size of the Brent crude oil contract will cost somewhere around 9 lakh rupees per barrel. The quotation which will be available on your trading screens is rupees per barrel. So right now, as I mentioned, that the price is around 9,000 rupees per barrel. Maximum order size is the number of, the maximum order you can give in a particular order. So one order can barrels. Tick size of the contract is rupees 1. So like any other crude oil contract, the tick size of this Brent crude oil contract is also
okay.
Maximum allowable open position. So this is the position limit. This is the amount of position a particular client or a particular participant can take. That is the maximum amount. So for the case, in the case of dated Brent crude oil contract, that limit is 4 lakh barrels, which is nothing but 4,000 contracts. As we mentioned that the contract will be available, as a cash settle contract. Any positions that you have open at the end of at the expiry of the contract will be settled in cash. Quality specification doesn't matter. As I said, it's a cash settle contract, but the quality assessment is as per the specifications which are guided by the S&P Global Platts. Final settlement price. So as I mentioned that this contract basically designed keeping in mind we wanted to replicate the physical market exposure. So if you keep in mind the physical market practices, the participation which is happening in the physical market is based on the monthly average of dated Brent crude oil assessment, which is given by the Platts.
Okay.
So in the physical market also, as I mentioned, if there is an importer or a refiner who is based in India, they are importing goods from a Middle Eastern, producer. The pricing is done on the basis that whatever quantity that I received in this particular month will be priced on the average of the dated month.
Okay.
So we have, closely replicated the contract, to behave specifically in line with the physical market. The physical, as I mentioned, in physical market, the average is taken for the final settlement price of Brent crude oil contract. We are also taking a monthly average of the contract.
Correct.
So,
So we just mentioned about settlement aspects briefly. Now, I mean, just to make it more simpler, can we explain further through example?
Absolutely. So we have covered a specific example in terms of considering the recent prices of crude oil. So as I mentioned, that the final settlement price of the NSC dated Brent crude oil contract will be the average of the dated Brent of that particular month. For example, between 1st May to 29th May, we receive assessments from Platts for dated Brent. So the assessments are only done on business days and not on weekends. So let's say we will receive around 20 to 22 assessments from Platts for dated Brent. We will take an average of that. Let's say that the average of that comes out to be $73. We will take an average of the RBI USD INR rate. So if we say that, if we consider, let's say, the month of May, from 1st month to 29th May, the average of USD INR rate comes to 91.39. So we will multiply these two factors, $73 into 91.39, and the result of that is 6,671.47. Now, our contract's final settlement price will be rounded off to the nearest tick. In this case, the nearest tick is 1. So it will be rounded off downwards, and it will become the final settlement price of that contract will become 6,671. So the idea is this closely mirrors the exposure the physical market participants have in the physical market, and we have tried to replicate the same for our Brent crude oil contract as well.
Okay, and when you were explaining, it is rounded to nearest tick, right?
Yes.
Okay, great. Now, before we move to the final aspect for today's explanation, I again request participants to post their queries related to today's topic in case they are having any queries under the Q&A tab, so that we can immediately after this final aspect, we can cover those queries. Now, lastly, Anup, surely NSE offers diverse commodity derivatives contracts, right? So what are the key benefits that one may get through NSE commodity derivatives?
Very, very valid question, Jwalan. So, just to give you a background, since 2023, NSE has been very active in the commodity derivative segment. We started with crude oil and natural gas contracts. Then we added products in different variants of gold, different variants of silver, base metals. Slowly, we are seeing a lot of traction in these commodity derivatives contract, specifically in the crude oil contract. Recently, we launched electricity contract where we have seen a market share of more than 70%. Even in the contracts which were already available on the other exchange platform, we have seen that the market share has been increasing. So the theme which is being developed right now is that the costs which are there available on the Indian exchanges. We are slowly taking a lot of market share in that. And the contracts which are newly, being launched newly by both the exchanges, NSE is the clear winner. And we are launching a lot of unique products also.
Okay.
Now, why do people prefer NSE commodity derivative segment compared to any other exchange? First and foremost, we are the number one derivative exchange in the world, and we give the market participants a robust, safe, and resilient technology platform. Now, the amount of trades which are happening in the equity markets, the commodity derivatives market is just a small fraction of that. So even in the equity markets where we are seeing so many trades, we have been very successful in handling those trades, accepting those trades, matching the orders.
Sure.
So we clearly have a very strong technology foundation that is being provided to the market participants for the commodity derivative segment. So the idea is that the even if the number of trades keep on increasing, your trading platform will always remain safe and resilient.
Got it.
Apart from that, collateral fungibility across the NSE segment. So this is one of the biggest advantage of participating in the NSE commodity derivative segment. Now, when we talk about equity markets start at 9 o'clock and they trade till 3:30 p.m. But when we talk about commodity markets, they start at 9 and they trade 11:30 at night.
Correct.
Now, between that particular time, between 3:30 to 11:30, there's a lot of collateral, there is a lot of collateral which
Lying idle.
lying idle, it is unutilized, with the clearing corporation. Uh, your money basically is just sitting idle. You're not making anything, any returns out of that. Now, since the NSE commodity derivative segment is operational, there is a function where you can shift your unutilized collateral from the equity segment or any other derivative, like equity derivative segment, currency segment. You can move it towards commodity derivatives, utilize it to participate in derivative segment. Once the trading is over in the NSE commodity derivative segment, you can again switch back that collateral towards the equity derivative segment, currency derivative segment. So this is one of the biggest advantages of participating on the NSE platform compared to any other platform, because we have multiple segments or multiple assets under one roof. So this market participants plethora, they give them a lot of options in terms of participating across different segments and with the same collateral. So that is one of the biggest advantages. uh, NSE, the reason we started the commodity derivative segment in quite late in 2023, because prior to that the regulations didn't allow NSE to have a separate segment for commodities. It was either through a different exchange. It was not allowed to launch a commodity derivative segment as a separate segment. But after the regulations changed in 2018, we were empowered and then we started this segment. But before starting this segment, also we have been historically linked with the commodity segment. So if you look at the big exchanges in India which are operational, like NCDX, we have a stake in that. There is Power Exchange, of India Limited, which is one of the uh, uh, key exchanges of the electricity markets.
Correct.
We also have stake in that. When we talk about the natural gas market, there is a spot exchange by the name of Indian Gas Exchange, which is doing very good. So we have a stake in that also. So the idea is that in commodities, it's nothing new for NSE. We have been participating in commodities since quite some time. When we talk about derivatives, this has been launched recently because of because of the regulations. Uh, but we have the resources to design products which are more catered to the market participants, specifically for commodities.
Okay.
Apart from that, all the FPI categories in India are allowed to participate, on the NSE commodity derivative segment. Our transaction charges are very economical, so I can go out and say that it's almost negligible, the transaction charges that you're paying in the NSE commodity derivative segment. A settlement is guaranteed by NSE clearing, which is rated as CCR AAA stable. So that also instills a lot of confidence in the market participants. So in case if there is any default, which is extremely unlikely, but if even if there is a default, there's a huge amount of settlement guarantee fund available with NCL, and it is backed by NCL to support or the to provide the trust to the market participants.
Correct.
And apart from that, the auto trade confirmation facility, which gives the market participants and FPIs to smoothly execute their transactions. That facility is also available with NSE commodity derivative segment.
And you quickly mentioned about the collateral fungibility. So quickly, you want to just dwell upon a bit?
Absolutely. So, as I mentioned, that the collateral which you have tied up in the equity or equity derivative segment, which is which is unutilized or kept idle after 3:30 p.m., that can be transferred towards the NSE commodities derivative segment, utilized over there. And once you have traded in the NSE commodity derivative segment, the same collateral again can be shifted towards the NSE equity and equity derivative segment. So this acts as a major motivating factor for the market participants, because they do not want to keep their funds idle. Correct. They want to utilize each and every minute of the money that they have kept as deposit on the exchange platform.
Correct. Sure. So, participants, we already have received a couple of questions, and by the time, in case you want to ask your query as well, you can just post under Q&A tab. And before we get into those couple of questions, Let me remind you, as we just explained a little while ago, that the symbol for this contract will be BR crude oil. So if you want to track the contract, you need to have the symbol kept in your market watch as BR crude oil. That is offered by NSE. Now, Anup, very first question received from participant is the participant is asking whether they need to do any additional operational activity in case they want to trade into this dated Brent crude oil contract. If I mean, assuming that they are having NSE commodity activated, will anything additional be required for this contract?
Absolutely not. So, this is being listed, this contract is listed in the NSE commodity derivative segment itself. So, if you are, so first case scenario, if you are activated in the NSE commodity derivative segment, you can directly trade in this particular contract. In case if you're not activated in the NSE commodity derivative segment, please reach out to your broker. It's just a matter of, it's a very operational thing. They can activate you in the NSE commodity derivative segment as well.
And assuming the query is from member itself, then as a member also, in case your NSE commodity derivative segment is enabled, they need not do anything. The contract is readily available, right? For their clients or for their participants, right? Now, second question is whether FPI clients are allowed for this contract or not.
Yes. So, in commodity derivative segment, FPI categories 1 and 2 both are allowed to participate. They are currently restricted to contracts which are cash settled and internationally derived. So contracts like WTI crude oil, natural gas, electricity, including dated Brent crude oil contract on NSE platform, they are open to participation from the FPI clients as well.
Okay. Third query is so the person is asking again in very simple words and in very brief manner. Three things, if you can just reiterate and explain in simpler way. First is dated Brent, second is Platts, and third is how this contract additionally becomes helpful in addition to WTI crude, which NSE already has.
Perfect. So I'll keep it very short. So first is dated Brent is nothing but the spot price of the Brent crude oil contract. To give you an example, for we have gold futures or silver futures on our platform. There will be a gold spot rate, which is the physical market price of today, and then there will be a futures price. Similarly, in the case of Brent crude oil, dated Brent is nothing but the spot market price of Brent crude oil as per today, and futures price is nothing but the price is what the market anticipates it will be in the futures. So that is one. Platts. Now, as I mentioned, so S&P Global is a price reporting agency. But it's a benchmark provider which have multiple benchmarks under the umbrella. So Brent crude oil is one, Dubai crude oil is second. They have in metal, they have a lot of assessments in metals also, in natural gas, ATF, refined products. So they have multiple assessments which they do, and they provide it to market participants. So assessment is nothing but what they'll do is they will speak to market participants, they'll speak to buyers and sellers, understand their trading requirements, and come out with an assessment of the price of that particular commodity. Now, in case of Brent crude oil, what they do is, there is a platform which is called as Livewire, which is hosted by S&P Global, where uh, market participants across the globe, so producers from US, producers from Middle East, consumers from Asia, consumers from US, participate on a daily basis. It acts as a trading platform where they give their bids and asks, and they give their quotes, and the trades happen in the physical market. Correct. So S&P basically records that, assesses it, assigns specific weights to it depending on multiple factors, and they come out with an assessment which is known as the dated Brent. Now this dated Brent price is the benchmark for all the physical market transactions. So any transaction which is being traded between, let's say, a producer and an importer, they refer the dated Brent price as their invoicing price for the particular commodity. So this Platts, the assessments which are given by Platts, 1,300 contracts in the global market, 1,300 derivative contracts are settled on the Platts assessments.
Correct, correct. Okay, we have just received one more query, it seems. Okay, is there any additional margin required in cash as well as in account or collateral will be required? I mean, so basically the participant is asking if any additional margin is required, and if yes, then what will be the quantum of tentative margin?
So currently, we do not have any addition margins which are addition margins which are imposed on the contract. We only have the span-based margin and extreme loss margin. So just like any other commodity derivative contract, the accepted collateral, towards the margin, maybe it may be cash, it may be BG, it may be eligible securities, as per the NCL circular, NSE clearing circular. The same can be accepted for trading in the Brent crude oil contract also. But currently, we are just charging the span based and extreme loss margin. No additional margins are implemented or charged on Brent crude oil contract.
Okay. There is one more question, Anup, if you can address. The person is asking why Brent and WTI price difference is somewhere around $10. Is it the case?
Yeah, so it keeps on changing depending on multiple factors. As I mentioned that, even though both varieties are crude oil, a lot of factors remain same, but there are certain factors which are different in case of Brent crude oil. As I mentioned that geopolitical factors, um, you know, have a bigger impact on the Brent crude oil contract. That is why these differences, differences are there. So if you look at these if you look at few months back, the difference between the Brent and WTI was somewhere around $5 to $6.
Okay.
Now it has increased to $10 because primarily because Brent may be seeing a lot of lot of volatility compared to WTI. Even WTI is witnessing volatility, but the volatility of Brent will be much more high because it is directly impacted.
Correct.
So if you must have recently heard the news about the Strait of Hormuz being closed, so that impacts the Brent most because that is the channel which is used by the European, the goods which are being flown from Europe towards the Asian markets, Middle East and Asian markets. So that again is the Brent crude oil variety. So it has impacted Brent crude oil more.
Sure. So I guess participants, these were the questions we received from some of you and which we have addressed. So before we close today's session, Anup, any quick concluding remarks that you want to give?
Sure. To just to give a summary of the entire, presentation and the plan or the vision that we have for the NSE commodity derivative segment. So our vision is basically to have contracts, which are already accepted by the market participants, such as WTI crude oil, natural gas, gold, silver, and at the same time develop unique products, for the Indian market participants, such as Brent crude oil. We are planning to come out, with different contracts such as Indian natural gas contracts, also where we will be the pioneer of, launching energy derivatives based on Indian price assessments. So that will be the first time that any exchange is launching a contract based on Indian price assessments. So the vision of NSE Commodities is basically, we want to revolutionize the product offerings which are available on the, exchange ecosystem. We want to bring in the hedgers as well as the financial participants, the physical market participants which have been, not been participating in the commodity derivative segment. So for across many years, we want to bring them on board as well. So, stay tuned on to NSE commodity derivative segment because we are planning a lot of new products, planning to introduce a lot of new products, make a lot of changes to the existing products. And we believe it will be very helpful for the market participants to, hedge their price risk exposure and meet their investment objectives.
Sure. Thank you, Anup, for this elaborative explanation and addressing the queries as well. Now, members, before just concluding, I would request that in case you are having any further queries related to contracts, or in case your NSE commodity derivative segment is not enabled yet and you want to get it enabled so that you can explore the offerings under commodity, you can reach out to our regional relationship team that is respective to your region, and they will definitely guide thoroughly to you. At the same time, you can reach out to other relationships that you are having with NSC. We'll be happy to help. Thank you for joining today's session again. We'll keep doing more and more open house and keep joining them. Again, on behalf of NSC, Anup, and each and everybody at NSC ecosystem, we thank all of you. Have a great day coming ahead.